neighbors, and good morning to you, my friends. Welcome to the neighborhood, or welcome back. If you are returning, thank you for coming back again. I hope you are enjoying yourself. I am Squealer D, and I am back again. And this time, we are in the wonderful world of finance, still learning how to trade on the stock market. Guys, this is not a one day lesson. We are going to be stock experts at the end of this. And that is why, my friends, it takes so long. We want to learn every bit of the stock market so that we can no longer be a neophyte. So, what is a neophyte, guys? A neophyte is somebody doing something new, something they haven't done before. Let's see what exactly it is. I'm pretty sure neophyte means somebody who is doing something new. It is a person who is new to a subject, skill, or belief. A 4-day cooking classes are offered to neophytes and experts. Okay, a neophyte, new to a subject. That's us, guys. We are market neophytes. So, because we are neophytes, we have to learn a whole bunch. But just so you know, if you are following along with me, congratulations for trying to learn something new. It is not always easy. It is very hard. Congratulations. And I am proud of you. It's hard to learn something new, especially something hard like money. I thought I spilled my coffee. But we are ready to go. We got the D, Squealer D for dinero, because we are going to get all the money. And we are going to be proficient stock traders. My coffee tastes weird today. Like somebody rubbed salt. Oh no. Oh no. I'm having mute issues, guys. We'll start again. Hold on. Let me see. Hello. Okay. I think we're good now, guys. Burr. I think we had a mute on here. Oh no. Well, that's no good, guys. At least we're finding it out real time, and I didn't stream for an hour, right? Okay, well, I'm rewatching, guys, to make sure we have sound. Okay. Good, guys. It's looking like we have sound. We are ready to go. We are still neophytes, guys. We are new to this subject. We're new to streaming subject, but we got this. Whew. Okay, I got all hot, guys. I drank my hot coffee, and then I got hot thinking that I was recording without sound again. Guys, this will be like my 6th time recording without sound. Who does that? Me, guys. I do that. So, here we go. We are going to go over Investopedia's how to trade stocks because we want to trade, but we don't know where to start. And that's pretty much where we're at, guys, right now, where we're just at the start. So if you're just tuning in, this is your very first class, you are fine to start here, or you can go back to the previous days. Oh, okay. Well, we have it all the way turned up. Let's see. On here. Okay. Let us turn the volume back up so we can see too. Okay, guys, we are doing a sound test here. I got my cell phone, and I am turning up the sound, turning down the sound. So let us know when it is great. Okay, it's still really low. Let's see. What do we turn up? We have volume for the mics. Where's the mic? Which mic are we on? I'm trying. I don't know which one it is. Okay, we're on mic 1. Yeah. Okie dokie. Let's see how this sounds. Are we any louder? It looks like it's in the yellow now, so maybe we are a little louder. I got my cell phone turned all the way up, so we should have good sound here. Okie dokie. Let's see how this sounds. Are we any louder? It looks like it's in the yellow now, so maybe we are a little louder. Okay, I think we are louder, guys. I think we are. I got my cell phone turned all the way up, so we should have good sound. Okay, I know you're hearing feedback, guys, but it's okay. We're adjusting sound. Okay. I'm pretty sure we are measuring good. So if I'm too loud now, guys, just adjust your sound down and yay us. We do not like it when... Okay, guys, we got it. That was great. Perfect. Whew. Let me pull my chat back up here so I can see the chat in case you guys want to say something. Okay. Back to work, guys. We got this. Little bit of sidestepping to make sure that everything's perfect. Like I was saying, I think I got salt on the rim of my cup. I don't know how salt would get there. Maybe somebody pranked me. Maybe last night they put salt on the rim of my cup so that when I drink it, it's on 4. Okay, I put it on 5 because it was almost to 5. So let's see. Let me turn it back up and yell it out in the comments, everybody. I see that there's 4 of you guys in here. Yell it out. Okay. We're getting there, guys. We are so close to being perfect. It's crazy. It's scary because what happens when you get perfect, guys? Woo-wee! Okay. So... pretty salty, guys. Salty coffee. It's like salty caramel or salty chocolate. I don't know. I'm not hating it, but I'm not digging it. I would like my coffee to not be salty, but I will drink it. That's where I'm at in life right now. So let's get on this, guys, because as I was saying before I was so low and interrupted myself, I am going to begin next week, guys, next week. So if you are following along, get your little ducks right in an order and hurry up and open up your paper trading account because next week, guys, next week we are ready. We are on the paper train and we are trading stocks starting next Monday. Monday morning, we are pulling open the paper trader. We're going to open it today. I'm going to show you guys. But we are pulling open the paper trader and we are beginning making trades starting Monday. We are practicing. Practice makes perfect. That's where we're headed. So we're going to read this little Investopedia, How to Trade Stocks. Want to trade but don't know where to start by Alan Farley. And it's reviewed by Samantha Silberstein. And it's fact checked by Kristen. Okay, so they got it, guys, and it's really good, and we're going to read it, and then we're going to talk about what we're going to do with the paper trader because it's coming. It's inevitable, and we are ready to go. So, millions of neophytes, guys, and when we were very low on the volume, we talked about what a neophyte is, and a neophyte is somebody that is new to a subject. So, millions of neophytes try their hand at the market casino each year, but most walk away a little poorer and a lot wiser, having never reached their full potential. The majority of those who fail have one thing in common. They haven't mastered the basic skills needed to tilt the odds in their favor. However, if one takes adequate time to learn them, it's possible to be on the way to increasing one's odds of success. World markets attract speculative capital. like moths to a flame. Most people throw money at securities without understanding why prices move higher or lower. Instead, they chase hot tips, make binary bets, and sit at the feet of gurus, letting them recommend buy and sell decisions that make no sense. A better path is to learn how to trade the markets with skill and authority. And that, my friends, is where we are at. We are learning skill and authority with the market. And that is why it's taking so long. Do not get discouraged. You do not go to school and learn to be a doctor in a day. You do not go to school of little d, of squealer d, and learn to be a day trader in a day. It's not the meaning of day trader is not you learn to trade in a day. The meaning of day trader is you trade options or stocks multiple times in a day. So that might be where you're confused, guys. This takes a minute and it's okay. It's fun to learn. We got a lot of stuff. So start with self-examination that takes a close look at your relationship with money. Do you view life as a struggle with a difficult effort required to earn each dollar? Do you believe personal magnetism will attract market wealth to you in the same way it does in other life pursuits? More ominously, have you lost money on a regular basis through other activities and hope the financial markets will treat you more kindly? Whatever your belief system, the market is likely to reinforce that internal view again through profits and losses. Hard work and charisma both support financial success, but losers in other walks of life are likely to turn into losers in the trading game. Don't panic if this sounds like you. Instead, take the self-help route and learn about the relationship between money and self-worth. So you see what they're saying, guys? Even if you're a money loser, you're the biggest money loser you know. You've never won. You have lost every dollar that has come into your grimy little hands. It's okay. If we can learn the self-help route of money and learn about the relationship between money and self-worth, then we can have a better chance of being non-losers in the stock market. And that's where we want to be. So the key takeaways of this are learning how to trade the financial markets. Learning how to trade the financial market begins with educating oneself on reading the financial markets via charts and price action. So that's what we have to learn to do, guys. That's first thing. Read financial markets via charts and price action. We have to be able to use technical analysis in conjunction with fundamental analysis to decipher price action. We have to practice makes perfect, or at very least, it allows the neophyte to test out theories before committing real funds. When you get your head on straight, you can embark on learning trading and start with these 5 basic steps. And we've went over 5 basic steps before, guys, 5 steps to trading. It's okay. Sometimes we have to go over things a couple times before we can really get into the hang of things. We can't just open up the paper trader, make a trade, and expect to be profitable. We just can't. We have to first follow the rules, guys. There are rules. So open a trading account. I've done this, guys. My trading account is through TD Ameritrade. It is a paper trader account, and it's called Think or Swim. And I've used it. It is very difficult to learn. There's also another one called Webull, like Webull, and I have not used that one. So I don't know if it's very easy or very hard to use. But we are going to learn to use one of them, and we are going to do it. Sorry if it seems we're starting the obvious, but you never know. Remember, the person who did everything to set up his new computer except to plug it in, find a good online stockbroker and open a stock brokerage account. Even if you already have a personal account, it's not a bad idea to keep a professional trading account separate. Become familiar with the account interface and take advantage of the free trading tools and research offered exclusively to clients. A number of brokers offer virtual trading. Some sites, including Investopedia, also offer online broker reviews to help you find the right broker. So I have decided at first I'm gonna try TD Ameritrade first. If not, then we're gonna bop over to Webull and we'll try that one. Either way, we're gonna have to learn one. That's our first step. Learn to read a market crash course. Financial articles. So we got to learn to read, guys. And we are doing a lot of that right now. Financial articles, stock market books, website tutorials, etc. There's a wealth of information out there. much of it inexpensive to tap. It's important not to focus too narrowly on one single aspect of the trading game. Instead, study everything market-wise, including ideas and concepts you don't feel are particularly relevant at this time. Trading launches a journey that often winds up at a destination not anticipated at the starting line. Your broad and detailed market background will come in handy over and over again, even if you think you know exactly where we're going right now. So, our broad market background that we're getting right now is going to help us, guys. It will. Trust me. So, 5 must-read books for every new trader. Stock Market Wizards by Jack D. Schwager. Trading for a Living by Dr. Alexander Elder. Technical Analysis of the Financial Markets by John Murphy. Winning on Wall Street by Martin Zwig. The Nature of Risk by Justin Mamis. Okay. Well, I haven't read any of those, guys. I'll let you know where they're available because I'm about to go and look it up. So, start to follow the market every day in your spare time. Get up early and read about overnight price action on foreign markets. So that is my thinking. We're going to get up, guys. And that's why we're practicing getting up early. Right now it is 8:26 a.m. So if we want to be before the market, we have to be up before 6:30 a.m. That's 2 hours earlier than right now. So that's the goal, guys. Just start waking up earlier and getting your life right. So U.S. traders didn't have to monitor global markets a couple of decades ago, but that's all changed due to the rapid growth of electronic trading and derivative instruments that link equity, forex, and bond markets around the world. And forex, guys, remember, is the foreign stock exchange. So new sites such as Yahoo Finance, Google Finance, and CBS Money Watch serve as great resources for new investors. For more sophisticated coverage, you need look no further than Wall Street Journal and Bloomberg. So then you learn to analyze. So you learn to read, and then you learn to analyze. Study the basics of technical analysis and look at price charts, thousands of them in all time frames. You may think fundamental analysis offers a better path to profits because it tracks growth curves and revenue streams, but traders live and die by price action that diverges sharply from underlying fundamentals. So do not stop reading company spreadsheets. You guys, we learned about these. Remember how to read company spreadsheets because they offer a trading edge over those who ignore them. So look at this, guys. We don't even know how to trade, and we're already working on trading edges. However, they won't help you survive your first year as a trader. So this is all broad information, guys, that's going to help us in the long run, but we are not going to be, what would they come by night traders? What do they call somebody who just comes and does it but is not a pro? We're not them. Your experience with charts and technical analysis now brings you into the magical realm of price prediction. Theoretically, securities can only go higher or lower, encouraging a long side trader or a short sell. In reality, prices can do many other things, including chopping sideways for weeks at a time or whipsawing violently in both directions, shaking out buyers and sellers. Guys, who doesn't want to learn about the market when it does things like chopping sideways for weeks at a time or whipsawing violently in both directions, shaking out buyers and sellers? Imagine if that was a scary movie. It would sound great. So the time horizon becomes extremely important at this juncture. Financial market grinds out trends and trading ranges with fractal properties. What's a fractal property, guys? A fractal. Although pricing may actually repeat patterns. One of the most basic repeating patterns is a fractal. Fractals are simple 5-bar reversal patterns. Fractals. Let's see if we got a fractal. Oh, these are fractals. Look, guys, these are fractals. What is this? A fractal. What's that mean? You see why we got to learn so much, guys? Look at this fractal. That's a fractal. That's a fractal. That's a fractal. Oh, man. A bearish fractal occurs when there's a high point with a bearish fractal occurs when there's a high point with 2 lower high bars on each side of it. Okay, let's go big, big, big. We can't zoom in. I need to go big. Okay, so this one does have a low, and a high. That's a high, a low, and a low. Oh, Okay, that's a bearish fractal. A bullish fractal occurs when there's a low point with two higher low on each side. So it's a low point and it's two highs. Okay, high, high. Low, low. Oh man, guys, we're gonna have to print off I'm gonna have to print off sheets and hang these on my wall, guys, so I can remember this stuff. That's how I like to do it. I like to look at it. And you guys remember, bullish means they'll lift you up on the horns. It'll go up, 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 up. And a bearish means they'll bear down on you. And it's going to go down, down, down. That's how we remember, guys. So back off the fractals and back over here. So with fractal properties, that means higher highs or lower lows around a low or around a high that generate independent price movements at short-term, intermediate term, and long-term intervals. This means a security or index can carve out a long-term uptrend, intermediate downtrend, and a short-term trading range all at the same time. Rather than complicate prediction, most trading opportunities will unfold through interactions between these time intervals. So, pretty much to break down everything they just said, they said that, yes, usually we think that the stock goes up or it goes down. But what it really does is it goes and does all these little weird things called fractals and trading ranges that generate chopping and violent whipsawing. And what they do is unfold time intervals that you can make money on, guys. It's going to go down low. It's going to show you that it's going to go back up. So then you know to buy, and then you sell at the dip. That is how they do it. We just have to learn what these are. And that's why people are so good at it. Just like a hair cutter, guys. Let's say somebody that cuts hair. They know how to cut your hair. They know if you have a cowlick right here, or like me, I have my hair and it parts naturally right in the middle. No matter what I try to do, my hair parts in the middle. So if I go to a stylist, she's going to know how to fix my hair and cut it for my part, right? She's seen my part a million times because she's done a million haircuts, right? Well, that's what these traders do. They have done a million buys and a million sells in all of these little fractal ranges and trading ranges. They've done this a billion times, guys. They've seen it. So that's where we have to get. We have to see it. We have to keep seeing it. We have to keep reading about it. We have to keep talking about it. We have to keep doing it. And then we'll know. And we'll be professional haircutters. So buying buying the dip offers a classic example with traders jumping into a strong uptrend when it sells off in a smaller time period. The best way to examine this three-dimensional playing field is to look at each security in 3 time frames, starting with 60-minute, daily, and weekly charts. So I am going to show you guys that right now because it's actually, wait, I don't have it open. So let's see what we can do. We can bop into, and this will show up, we can bop into Yahoo Finance, guys. Yahoo Finance is a great place, guys. You guys should go to Yahoo Finance every single day. Just go there and look at it. No homework other than just go and look. Read something. If you see something that is interesting, read it. But if you don't see anything interesting, just keep scrolling through. Keep scrolling through. Read headlines. You know, eventually you're going to see something that is interesting to you one morning and you're going to get sucked in. Trust me. That's how it works. So over here, guys, we have all of this business news. News you probably don't even read because this news is not the news that is on your news, is on your typical news. This is for traders. They are talking about certain things in business that will make a stock go up or down. So these are very, very, very helpful for people like us that are learning the stock. Perfect. Over here, you have all the little symbols, ones that I've recently viewed. You can look at them. You can see what their price change amount is. Like, look at AMC, guys. AMC right now, its last price was $4.79. That means it has had a change of 74 cents. It's an 18% change. That means compared to something like SIVB, which is a financial group, it's still at 106 and it's had 0% change today. So this, guys, when this change means volatility. The AMC is moving. So we can look at AMC and we'll probably see a move. We can look at different, this is what they're talking about. Look at different, this looks like it's two-dimensional, guys. It's just one chart that goes up and down, lays flat, right? It looks two-dimensional. But if we start to look at, this is the one-day map. We'll zoom in. So if we look at the one-day, we can zoom in. If we look at the 5-day, and you see how it changed, guys, this is over 5 days. If we look at the 1 minute map, you can see close up of what is happening right now. If we look at 3 months, you could see AMC's going up, it's going down. So these are the candles that they're talking about. This one doesn't qualify because this is higher. They were talking about something that is a high and it has 2 other highs around it. So let's see if we can find one. So right here, this is what? A bullish, what was it called? A factoid? I don't remember. Anyway, guys, this is what they're talking about, 3D. You see how you could see a bigger, this is 6 months. Year to date, you look at 1 year, over 1 year. Look at how big of a rise. AMC was at $23. Now AMC is at $4.97. Man. So it also tells you here, guys, on the short term, it's bearish. It's going down, guys. It's bearing down. Midterm, bearish. Long-term, bearish. And I don't know what all of these things mean. So we are going to learn them. But this is what they're talking about on the map. So 1 day, 1 minute. You can change it 1 day, 2 minutes. Some people like 5 minutes. You can zoom in on the candlesticks. You can even change the candlesticks. You can move it around. This, I think that Yahoo Finance has the best, that I've seen, the best maps, charts, whatever you want to call them. I think they have the best. So clap for Yahoo Finance. They are very, very, very good. I like Apple too, guys. I like to look at Apple stock. I don't know about buying Apple stock. I did some playing with the options on Apple stock. But I heard, even though, let's see, what's their 3 month? What's their 1 year? Their 1 year is up. They had a dip back in January. But what I heard was that Apple was trying, because you see, guys, how they stay about here in the middle at like 140. But they go up. They went up to 174. They're at 163 right now. But I heard Apple was trying to get all of their stock down to 120, like to sit at about 120. So I don't know what's going on. I guess we'll see. We'll have to watch that, put that in our memory bank. Watch Apple stock. See if it really goes back down to about 120. That's what I heard that they were doing. And see if we can trust the market. And see, you guys can even flatten out these more so you can get a better understanding, or so you can see the candlesticks differently. This is how you see it in a 3D space, guys, by looking at the different charts. And that's what they meant. So if you look at each security in 3 time frames, starting with 60-minute, daily, and weekly. So we'll see 60 minutes is 1 minute. Okay. 1 day, 60 minutes. That's this one. And then they want you to look at it weekly. Okay. So in weekly, you can kind of see that it's been more steady. Daily, it kind of goes up and down. If you go to the 1 minute, it looks more volatile probably than it is, but I'm not sure, guys. Don't take my word on that. And then the other one was just a daily chart. So just a day. So it looks like this is April, it's 5/6. What's this? 8/5. It looks like monthly it has this is April and it was up April, March. every 5 months. Weird. So that's just a good way to kind of look at the different cycles. Remember, it's cyclic, guys. So practice trading. It's now time to get your feet wet without giving up your trading stake. Paper trading or virtual trading offers a perfect solution, allowing the neophyte to follow real-time market actions, making buying and selling decisions that form the outline of a theoretical performance record. It usually involves the use of a stock market simulator that has the look and feel of an actual stock exchange performance. Make lots of trades using different holding periods and strategies, and then analyze the results for obvious flaws. Investopedia has a free stock market game, and many brokers let clients engage in paper trading with their real money entry systems too. This has the added benefit of teaching the software so you don't hit the wrong buttons when you're playing with family funds. And they have their simulator right here, guys. You go to Investopedia, right up top. You can log in, do your games, research, trade, and a leaderboard. And maybe we'll try this out after we get used to the trading. I will open one up and we will give that a go, because it might be really great. So I love Investopedia, so it might be actually cool. We will definitely try that out. So when do you make the switch and start trading with real money? There's no perfect answer, because simulated trading carries a flaw that's likely to show up whenever you start to trade for real. Even if your paper results look perfect, traders need to coexist peacefully with the twin emotions of greed and fear. Paper trading doesn't engage these emotions, which can only be experienced through actual profit and loss. In fact, this psychological aspect forces more first-year players out of the game than bad decision-making. Your baby steps forward as a new trader need to recognize this challenge and address remaining issues with money and self-worth. Okay, guys, greed and fear. Remember how we're going to conquer those? We told ourselves from the very beginning, we are going to conquer greed and fear with risk management. We are going to set out strict guidelines and rules before we start trading with real money. And those rules will help us. It'll mean that we make money slower, but it will mean that we lose money less so that we can feel better about ourselves and not feel so much greed and fear. If we have a good plan, guys, you can go into war with a good plan and not be afraid because you have a good plan. We can go into this war with a good plan and not have fear of losing too much money because we'll have a stop loss. And our stop loss will be a percentage that we feel comfortable losing every day. And that's okay. You can lose a little bit of money if you gain money, right, guys? If you lose $5 a day, it's okay if you're gaining $10 a day, right? We can do this, and we can stomp out greed and fear before it even starts by having good risk management. So you tell yourself you are going to have good risk management. You are not going to get caught up in any of the psychological emotions of money, because money is a tool, and you can't get upset with tools, right? So as long as we learn all of the tools, we will be okay. And we just have to keep that in our mind and remind ourselves every day. Just like we're learning, we have to remind ourselves about greed and fear and how we are going to move forward with this. If you want to be rich, you have to think like a rich person. I don't think rich people are worried about their money, greed and fear at all times, guys. They've had it for a while now. If they were afraid all the time, their lives probably would be horrible. And just like these people, forcing first-year players out of the game because of their psychological aspects, not because of their bad decision-making, guys. So these people were making good decisions, but they let fear and greed, they let the emotions of money overplay their smartness and their good decision-making. We will not let that happen. That's why we're learning for so long. We're not going to rush in and lose our money that we worked so hard to save up for. I understand that for some people to get a savings account for emergencies is very hard work. It's also hard work to get that savings account for emergencies and then get a savings account for investing and risk that investment. I understand how scary that is, but we have to get rid of that fear and that greed right now by understanding that we are getting smart enough to control risk management. That is what the smartness is for, guys. That is why we're here learning. That is what we're stamping out, okay? So, other ways to learn and practice trading. Though experience is a fine teacher, don't forget about additional education as you proceed on your trading career. Whether online or in person, classes can be beneficial, and you can find them at levels ranging from novice, with advice on how to analyze the aforementioned analytic charts, for example, to pro. More specialized seminars, often conducted by a professional trader, can provide valuable insight into the overall market and specific investment strategies. Most focus on a specific type of asset, a particular aspect of the market, or trading technique. Some may be academic, while others are more like workshops in which you actively take positions, test out entry and exit strategies, and engage in other exercises, often with a simulator. Paying for research and analysis can be both educational and useful. Some investors may find watching or observing market professionals to be more beneficial than trying to apply newly learned lessons themselves. There are a slew of paid prescription sites available across the web. Two well-respected services include Investors.com and Morningstar. It's also useful to get yourself a mentor, a hands-on coach to guide you, critique your technique, and offer advice. And guys, that's another reason we're here. We can get more people to give us a hand, little nuggets of their knowledge by joining together. So if you are here with me and we are learning together we have a better chance of finding ourselves a mentor and finding people to help us and understanding, even if we go and pay for help from somebody like Investors.com or Morningstar, we have a better chance of understanding and coming out on top by working together. So we create a money team like we're doing right now. Join up the money team. We learn together. We hang out together. We get rich together. It's backwards mentoring, guys. We are like little kids looking for our mentor together, and that's okay. Because when groups of kids get together, they always do better than when they're by themselves. Trust me. If you are out making a clubhouse, do you want to be making that clubhouse by yourself, or do you want to make that clubhouse with a gang of kids? I'll take the gang of kids because they carry wood. I'm not carrying all the wood by myself, guys. I can help you carry your wood, and you can help me carry mine, and we can get rich on the stock market. Well, at least that's my plan. If you want to join in, come along, my friends. Now, how to manage risk. I said we are going to control greed and fear by doing one thing, guys: managing our risk. How do we manage our risk? When up and running with real money, you need to address position and risk management. Each position carries a holding period and technical parameters that favor profit and loss targets, requiring your timely exit when reached. Risk management techniques will vary in complexity and will depend on your particular strategy, but there are some overall tips. Know your entry and exit points and stick to them. So, like we were talking, if you want to buy really low down here, you know that this is your entry point right here. You see that it dropped, it's coming back up, and you buy right here. And then you get up here, maybe you know that it's going to drop, so you sell. Look at that. That was your entry point, that's your exit point. You didn't keep here and then go up all the way here. You didn't do that. You sold. You knew it was going back down. Let's see. Can I zoom in? I lost it. Where'd it go, guys? Well, that wasn't smart, was it? We'll do it here. So you bought really here low. You seen the green candlestick and you were like, yeah, it's going to go back up. You watched, it did go back up. So you bought right here, 135. You waited, it went up. And right here, you got a red candlestick at 141. Then you got a red candlestick at 137 and you said, okay, I'm going to sell at 137. So you bought at 135 and you sold at 137. Guys, that's $2 a share. So if that was a couple day move, you made it, let's say you bought 100 shares, you made $200. That's just a little one. Let's say you bought on this candlestick and you went all the way up here. That is a $20 rise. A $20 rise in a half of a month. So as you can see, there's lots of opportunities here, guys. We just have to know our entry and know our exit and know the technical parameters that favor profit and loss targets. So know your entry and exit points. Unless you have a good and objective reason to change them, don't change them. Set stop losses. I talk about these all the time, guys. We will set stop losses. Those are our rules. We stop loss. The stop loss order. Make sure you use it. Stop loss. We're going to go over it. We are going to learn stop losses like they are our best friend. Take profit orders. Okay, so I don't even know a take profit order. I don't even know what a take profit order is. A take profit order is a type of limit order that specifies the exact price at which to close out at an open position for a profit. If the price of the security does not reach the limit price, the take profit order does not get filled. Okay. So you see that? Things we don't even know about yet, and we're still learning, guys. That's why we're here every single day, learning, Monday through Friday. Unless we have something wonderfully great to do, like grocery shopping on Monday, guys. Monday was grocery shopping, so I wasn't here. That's another thing, guys. Before we're going to talk about the rest of this risk management, let's talk about your overall life right now. So I can't expect myself to learn all of this stuff that we're learning and become a stock trader and still be doing other ugly, negative things in my life. I can't expect myself to wake up early and be at the stock market at 6:30 in the morning to do trades and get rich if I have bad health, guys. If I can't wake up in the morning, how can I get up in the morning to be clicking? I need to click to do this stuff. You guys see this? Look at this. What happens if I think I'm looking at a 1 day, 1 minute, and I'm not? I'm looking at a 5 day, 1 minute. And then I read things wrong because I'm not paying attention. I might mess up and I might lose some money we worked hard for. So I need to have good sleep habits, right? And that's what I'm working on right now. That is something you'll want to work on. Good sleep habits, good eating habits. Guys, if you have to run to the bathroom all the time because you have bubble guts, you can't sit there and watch the stock market for a couple hours a day. You are going to be running to the bathroom. You need to have good food habits. So if you have good sleep habits and you have good food habits, you're going to be healthier. So we're talking about a 100% change in our lives in order to do this. If we start saving money, we are going to need to be doing things way more efficient at home. I'm talking, if we're going to be saving up $10,000 for an emergency fund, we need to cut things out. We need to cut out the Starbucks. We need to cut out other expenses that we're spending towards instead of saving, instead of our emergency fund. If you say, but Squealer, I don't have money for an emergency fund. Okay, but do you have internet? There's a lot of things we can cut out. I understand that you need internet, but there are free internets, guys. I understand that you think you need Netflix, but you don't. Netflix, there are free movies, guys. Free movies on YouTube. You do not need Netflix. That is a charge that can go straight into your stock exchange trading. You might as well trade that money because Netflix is becoming a millionaire off of your money. Netflix is getting rich. I would suggest you cancel Netflix and you put that money into a savings account, either for your emergency fund, which is very, very important, guys. Everybody should have an emergency fund because emergencies are coming. I can't tell you what's coming. I'm not a mind reader. I don't know the future, but I do know emergencies are coming. For you, for me, for everybody. Everybody is going to experience emergencies over the next 10 years. So that means you need an emergency fund. In order to get to trading, you have to have an emergency fund. You cannot come in and trade money and lose money and not have money for yourself to live off of. That would be ignorant. And we are not doing anything this way ignorant. We are taking risk management and we are trying to get rich. People do not get rich off of being ignorant, guys. And then one last thing on this healthy, because I know everybody thinks, but Squealer, we have the right to be what we want. And if we want to be overweight, that's fine. That's not being unhealthy. No, it is being unhealthy because your health will decline if you're overweight. And if you're overweight, you're spending more money on food than you need to. And we could be putting that into our savings account, getting rich. And then let me finish it up with one more thing, guys. Make you a little bit more mad at me. the majority of rich people are not overweight, guys. The majority of their children are not overweight. They are not wasting their money on food. They are not wasting their money on treats, and they are not sitting around doing nothing. They are getting richer. They're using their money, not their body, using their money to get richer, and they're keeping their body healthy. That's where we want to be. So if we want to be there, we have to get there mentally. We have to think in our mind like rich people. We have to think rich. So we have to eat rich. We have to work out rich, guys. It's time to get buff. It's time to get healthy, and it's time to get buff, and it's time to manage our risk in everything. If we're going to manage our risk and not lose our money on the stock market, we have to manage our health, our risk in our health, and not get overweight. How are you going to get rich if you have a heart attack? You can't. So we are going to set stop losses and take profit orders accordingly, cut losses early, and avoid the emotional or psychological urge to take on ever greater risks in hope of breaking even. More importantly, don't panic. If you're building a long-term buy and hold portfolio, diversification can lower your overall risk without sacrificing expected return. Diversification, guys, just means diversifying it, putting some here, putting some there, putting some there. Also, think about when to rebalance your portfolio as markets move over time. And rebalancing is what, guys? It is just changing the weight of where you are invested. So, if you haven't done so already, now is the time to start a daily journal that documents all of your trades, including the reasons for taking risks, as well as the holding periods and final profit or loss numbers. This diary of events and observations set the foundation for a trading edge that will end your novice status and let you take money out of the market on a consistent basis. So, next goal, guys. If you do not have yourself a fancy little notebook to write in, it can look like anything, guys. It could be anything you want. You can write on just a piece of paper. That's fine. If all you have is a ruddy napkin, you get yourself some ruddy napkins for now, and you write on those ruddy napkins because that's okay. So, we'll write it all down, guys, because writing it down and journaling, that is a great teacher. Salt coffee, guys. I don't know what went wrong this morning. I got salt on my tongue. Okay. Salt coffee. So, what are the main differences between trading and investing? Major differences between trading and investing include investing time horizon. This can span years or decades because the objective is long-term wealth accumulation, while trading involves much shorter time spans. So, we want to do both, guys. We want to trade so we can get more money to invest long-term. We are not trading so that we can buy a car. We are not trading so that we can buy $1 million house. We are trading to invest so we can have long-term wealth. Okay. Number of trades. Because investing generally means buy and hold, the number of trades is usually much lower than in trading, where frequent trades are the norm. And the type of trades. Investing typically involves long positions only, while trading may include long and short positions to benefit from both higher and lower market moves. So, what are some common trading strategies? Common trading strategies include following the trend, or buying when the market is rising and short selling when it is declining. Contrarian trading, or going against the herd. Scalping, which involves exploiting minute price gaps caused by the bid-ask price, and trading the news. And trading the news is exactly what it sounds, guys. People talk about stuff, so bloop, 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 starts trading. Is technical analysis or fundamental analysis more important for trading? Because technical analysis looks at the short-term picture and can help you to identify short-term trading patterns and trends, it is better suited to trading than fundamental analysis, which takes a longer-term view. And guys, we are going to learn fundamental analysis and we are going to learn technical analysis. Write it in your little book. What traits are necessary to become a successful trader? In addition to knowledge and experience, the most important traits for a trader are discipline and mental fortitude. Discipline is necessary to stick to one's trading strategy in the face of daily challenges. Without trading discipline, small losses can turn into huge ones. Mental fortitude is required to bounce back from an inevitable setback and bad trading days that will occur in every trader's career. Trading acumen is another requisite trait for trading success, but that can be developed over the years through knowledge and experience. The bottom line is start your trading journey with a deep education on the financial markets and then read charts and watch price actions, building strategies based on your observations. Test these strategies with paper trading while analyzing results and making continuous adjustments. Then complete the first leg of the journey with monetary risk that forces you to address trade management and market psychology issues, which is fear and greed, guys. Look at that. We got through it. So what we're going to do is, if you want tonight, go ahead and open up TD Ameritrade Thinkorswim and get that going. Let's see if I can open mine up really quick here and show you. Go to TD Ameritrade and get their Thinkorswim. Either get it on your phone or get it on the computer app. See, we got this Thinkorswim. Let me bop on over here. There we go, guys. Bopped right to my Thinkorswim. So, this is what it looks like, guys. And it looks super, super, super scary when you first log in. This is what it looks like when I first open it up. This is how mine looks. Everybody's setup is going to be a little bit different. I have my setup. I have my setup set in here. What I have in my setup is my account info, which shows how much paper buying I have. I have almost $200,000 available, $10,000 on the foreign stock exchange. This little area right here shows live news, and this is so helpful, guys. This shows any live news when it was posted of anything. Like, for instance, we were looking at Apple. Here's Apple this is Apple's ticker, guys, or symbol, whatever you call it. But here is Apple News. If you look, they have done it for you. So they write the news down here. You can read each of the news that applies to Apple. How great is that, guys? Look at that. All the Apple news is right here. Then you have level 2. Level 2 gives you the bid to ask spread. This is the bid price, 164.70. The asking price is 164.72. So it doesn't have a very big spread right now. A big spread would be like 161 was the bid price and the asking price was 164. This shows you all the bids. These are what people want to buy. These are what people want to sell. And this helps you decide, are there more people wanting to buy this stock? Look, there's 20 people want to buy it at 164.20. There's 4 people, not people, guys. These aren't people. These are batches, I guess, like 100 batches, I think. But anyway, you can kind of see, like, is it more people want it or more people don't want it because it's going up or down? You can look at the chart for Apple right here. This is how you would buy it or sell it. So we can look at the chart here and move the chart around. This is the MACD line. I am just learning what a MACD line is, guys. So we are going to learn about this. And this is something that traders use to help purchase. This is the volume of the amount that's trading. Like you can see here, it was a big volume and it's went down because it's doing something right now. So it's way up, guys. So the volume is way low because when the price is up, people aren't going to really want to buy it. They're going to want to sell it, right? Price is way high right now. So makes sense. Then we also have a monitor. Mine doesn't have anything, guys, because I don't have any active positions right now, but we're going to do all of that. Don't worry. So that is these are different, like, little little tabs that teach you things. It's great, guys. So go ahead and open one of these up. Open up a TD Ameritrade if you want to come along with me. And tomorrow we will start checking this out and see how to use it, guys. I've done a couple trades on it. I started out at 200,000. Obviously, I've lost a little bit of money, played around on it. I did do, what did we do? Trades. No, I did monitors. Where's all my activities, account statements? What do we get? Profits and losses. Here we go, guys. This is what I traded. I did, some of these high ones are options. I was trying to learn how to trade options. But as you can see, anything in here, in parentheses, is a loss. $50 loss, $730 loss. And anything that's not in parentheses is a win. So as you can see, I did a couple trades here. MFH, Mercury, I got $54. I won $490. Not one, guys. I act like this is a game. This is not a game. Paper trading to me seems like such a game. It's not a game, guys. This is practice. So I made a $490 Peloton move. And I think, guys, this was like, maybe I held this for 2 hours and I made $490. And then I rebought some and made $35. So I made $525 that day off of Peloton. And that was pretty cool. I was just practicing. But then I lost $200 same day on Roku. I made $150 on TAL Education and another $11. So I made $161. But then on ThreadUp and Top Ships, I lost $100. So as you can see, guys, you're going to lose. You're going to win. But if you can keep your losses more than your wins and not do stupid things like lose $200 on Roku because you had no exit plan, no entry plan. I was just buying and flying. And then my Apple loss, guys, this is an options loss because guess what I did? I said, Squealer D, today you're going to learn to trade options. And I went in there and I bought an Apple option. I didn't know what I was doing, guys. Options are crazy. Let me show you this options chart. So I'm lying. I'm not going to show you because I don't even know how to trade options on desktop. I had to go into my phone and do it on mobile. So I guess that is one of my other lessons is I need to learn to trade options on the desktop. I went into my phone and I traded options. And by trading options, I lost $713 because I did not know how to sell an option. My option was worth a couple $1,000s in Apple. No joke, it was worth $4,000. It was set to expire that evening. All I had to do was sell it and I would have made $4,000, guys. I woke up, I was so happy. I was like, yeah, I'm an options trader. Guess what? I had no idea how to sell it. I didn't know. I couldn't get rid of it. It just sat here. And it kept losing money and it kept losing money because options lose money the closer they get to their expiration date. Well, I just sat there and sat there and sat there and sat there. And then finally, I Googled it, guys. I Googled how to sell an option. I should have did that at first, guys. But I didn't. And it took me a couple hours. And I finally sold it and I lost $730. So not only did I lose the $730, I lost the $4,000 that I would have gained had I sold it at the beginning of the day. So that, my friends, is why we are going through all of this learning. Because what if that was a real $730? I lost it because I didn't know how to sell something. That's the most ignorant excuse I've ever heard in my whole life. I lost $730 because I didn't know how to sell something. Okay, well, that's not smart. Don't do that again. So learning lesson for everybody. Before you buy something that needs to be sold, learn how to sell it. Simple stuff, guys. You think, right? Simple. But we get caught up in this stuff and it just grabs us by the horns and it pulls us down and we get caught up in it. So in order to not get caught up in it, you have to be smart, guys. And by smart, I mean practiced. There's nothing in our genius that's going to be like, oh, don't make that mistake, except for practice. The fact that I've done it now, I will never do that again. The fact that I've done it now and you've heard that I did it, you should never do it again. Learning, guys. We learn together. Now, if you make a mistake and you tell me about it in the comments, I won't make your mistake. We learn together. We win together. We get rich together. Everybody's got a money team that got a lot of money. That's all I'm saying. So that's what we're here for, and that's what it's going to be. It's been about enough time now, guys. I think we've hit the hour of our learning, and I don't want to overlearn you. So we're going to close up. We have looked at some finance things today. We've actually checked out Think or Swim. We are ready to go with Think or Swim, guys. You are going to get it connected up, and by Monday morning, we are going to trade on Think or Swim. We're going to practice our trading. So get that ready. You have until Monday. Tomorrow, if you have it, we will check it out and look at a couple more things tomorrow and make sure that we can all get it up and running for Monday morning. But we are on our way. Yay, us. So I think that is it, guys. We have learned enough. I will close this out. I hope you all have a beautiful, wonderful rest of your day. It's great to get up and talk about money, learn about money, and get excited because then you have a good rest of your day, right? So I will see you tomorrow here, same time, same place. Guys, we're trying to make it a little earlier every day. So if you miss me because I'm getting up earlier every day, just watch the video. It'll be here for you. Same learning, even though you're not live. That's okay. We can do this at our own pace on our own time. And that's what's perfect about teaching yourself. You don't have to go to school. You don't have to deal with homework. You don't have to deal with finding a daycare for your children. You just bop on when you can. Maybe you're in the bathroom. Maybe you are utilizing your time and you watch me in the bathroom, and that's okay. I say learn where you can, and that's okay. Everything's okay, guys. That's pretty much what it is. Just do you. As long as you are doing you, trying to get better and try to get rich, I say way to go. You won. That's it. Just try to be better. And also, if you guys are interested in healthy lifestyle, eating, getting buff, getting strong, that's where I'm headed, guys. I am headed back to the gym. I need to look at this little muscle. I got to get it bigger, guys. So if you're interested, let me know. Throw it in the comments that you want to get buff too. Maybe we need a money team and a muscle team. Maybe we could be the money muscle team. Who knows? We'll get big muscles and big bank accounts. And then what can people say to us? I can't say nothing. Okay, ladies and gentlemen, you guys have a great day. And I will see you back here in the neighborhood tomorrow.